Do you work for a family-owned business? If so, you may be wondering how it could impact your chances of getting approved for a mortgage. Lenders look at employment and income very carefully, and when family ties are involved, the rules can be a little different. So let's get into how mortgage lenders treat income from family-owned businesses, what extra steps you may need to take, and how to prepare before you apply. Lenders want to make sure that the income you are using to qualify is reliable and consistent. When you work for a family member, lenders take extra cautious approach because they want to be certain the job and the paycheck are valid. Think about it this way. If your mom or uncle owns the company, it wouldn't be that hard for them to manufacture a fictitious pay stub, W-2, and verification of employment to help you get approved. A lender cannot just assume your income and employment records are the same as someone working for an unrelated employer. They typically require additional documentation to verify everything. Expect to provide more than just a W-2 or pay stub, even if you're a regular employee in the company. Depending on your role in the business, lenders may ask for 2 years of personal taxes, business tax returns for the family company, including a K-1 to show ownership, a CPA letter, year-to-date profit and loss statements, bank statements that support the flow of income, and proof that your role is real and that the income is likely to continue. If you're an owner or part owner of the business, the documentation requirements can be even more detailed, since your income may be tied directly to the company's financial health. If you own part of the business, you may be considered self-employed for mortgage purposes. In that case, lenders will determine your income not from your pay stubs and W-2s, but personal and business tax returns. This often means more paperwork, and it can also mean lenders average your income over 2 years to get a realistic picture. If you work for a family-owned business and want to buy a home, here are a few things you can do to make the process smoother. 1. Keep clean, accurate tax records for both personal and business income. 2. Make sure your paychecks and deposits are consistent. 3. Work with a lender early so you know what documents will be required. And 4. Be prepared for extra questions about your role and responsibilities. Working for a family-owned business does not mean you can't qualify for a mortgage. It simply means lenders will look a little closer at your income to make sure everything checks out. By keeping your documentation organized and being upfront with your lender, you can get approved and move forward with confidence. For more tips on mortgage requirements and income qualifications, visit mortgageresearch.com. If this video helped you, hit like, subscribe, and tap that notification bell so you don't miss any future updates. And if you've got questions, drop them in the comments. We'd love to help. Thanks for watching, and here's to making your homeownership goals a reality.